everybody? Another week, another dollar. Today is Sunday. Hope you're all enjoying your weekend as we get prepared for what will be the fourth straight week of being on coronavirus lockdown. Before we get started, just want to send a quick shout out to my beautiful wife for the fresh cut this morning. The result of social distancing and not being able to go to your barber. Not bad, might I say, not bad. In any case, these are the top 5 things I'll be watching this week, starting off with number 1. Investors will continue to monitor headlines surrounding the coronavirus crisis and just how soon the drastic stay-at-home measures enforced in order to contain the spread of the virus will finally come to an end. There are now more than 310,000 confirmed cases in the United States, according to data from Johns Hopkins University. The death toll in the States continues to rise as well, with the virus now claiming the lives of almost 9,000 people. Globally, there are now more than 1.2 million confirmed cases, with total deaths approaching 65,000. So really, at this point, as long as lockdown measures are in effect for most major countries in the world, the damage done to the global economy will only get worse in the weeks and months ahead. So obviously that will be something which we'll be keeping our focus on in the coming days. On to number 2. Investors are bracing for more volatility and big market swings in the holiday shortened week ahead. Last week, stocks on Wall Street suffered their third weekly decline in a row, with the Dow dropping about 3% and the S&P losing almost 2%. At this point, it's clear that markets at some point later this month will take out their lows seen in March. Investing.com's Twitter account ran an interesting poll over the weekend for which 80% of respondents said that they expect to see more selling and more pain ahead when asked if in fact a bottom has been established. So just keep your eyes on that. Just a heads up, like I mentioned at the start of the segment, markets will be closed on Friday due to Good Friday, so it's just a 4-day trading week this week. On to number 3. In what will be a big week for oil markets, OPEC and Russia announced that they will postpone their emergency meeting scheduled for Monday, at which they were expected to discuss oil output cuts after Russia and Saudi Arabia traded fresh barbs between them over the weekend. The meeting will likely take place on Thursday instead, allowing more time for negotiations. This comes after oil prices really enjoyed their best 1 week gain on record, with WTI prices soaring almost 32% after President Trump hinted that an oil output cut agreement between the Saudis and the Russians was imminent. However, developments over the weekend have pretty much poured cold water on that, and we're expecting crude prices to suffer sharp declines when futures markets open on Sunday night. I wouldn't be surprised to see a drop of more than 10%. On to number 4. We get the latest Fed minutes from its emergency meeting on March 15, at which it cut interest rates by 100 basis points and restarted its quantitative easing program. In my opinion, the Fed multiple times last month pretty much stepped up in order to provide liquidity at a time when credit markets were freezing up, money markets were freezing up. Essentially, Jerome Powell saved financial markets from imploding at least 2 or 3 times last month. Hopefully there might be something in those minutes which could shed and reveal further light on the Fed's thinking. Those are scheduled for Wednesday. And finally, number 5, on the data point. On the data front, the biggest data point of the week will likely once again be Thursday's initial jobless claims numbers. Last Thursday's report showed 6.6 million new filings for initial jobless claims benefits. That came after the around 4 million seen in the week before. We're expecting another 5 or 6 million on this week's initial jobless claims report. Check out Investing.com's economic calendar for the forecast on that. The data, at least the jobs data, has the potential to really sink the U.S. into a depression. Not talking about a recession, but a major depression just from the hits to jobs. So hopefully I stand wrong on that. But that's it for me for this week. Head over to Investing.com's YouTube page. hit the subscribe button. May the trading gods be with you. Stay safe, stay healthy, and wash your hands.